at GCP Global. Now, Gabriel, I understand you're at the Investor Roadshow for Singtel's Netlink IPO. What's your view on the valuation and opportunities for growth as it stands?
Yes, we're actually heading for the IPO roadshow for institutions and fund managers in an hour's time at the Intercontinental Hotel. At GCP Global, we're actually well known for anchoring good IPOs and are actually privileged to be invited. With regards to the business and the IPO, I think essentially our initial thoughts are this. I think if you look at Netlink as a business, it is actually a monopoly. It's therefore a business that's actually incongruent with our goals. It's also growing nicely. The revenue grew like 11% last year. At the EBITDA level, it grew 12%. That looks fairly okay for a monopoly. My problem and our reservation is actually with regards to how it's been structured. It has actually been structured like a business trust. And in this particular sense, it's actually offered to the market at 4.73% to 5.3% yield. Now, we reckon that at this level, it's really, really very low compared to other business trusts. And compared to cousins in the REIT sector, it's really a poor comparison. I think essentially, being the biggest IPO in the market, I think the management seems to communicate to the general public that they are unsure as where the pricing is, because it's really one of the widest pricing. The IPO pricing guidance is 8 cents to 93 cents. Very, very wide. Haven't seen this for an IPO for quite some time. But I think what is very apparent is that for the mother company, Singtel, they will actually benefit financially because they are likely to register 1.4 billion gains in its books from the listing of Netlink.
All right, let's talk about the property sector. What's the outlook for office rentals in the near term, and how is that likely to impact the REITs that are operating in this category?
Well, this has actually turned out very clearly along the course that we have predicted in our various investment classes, as well as actually in our various interview programs with your station. We have actually called for a recovery since the beginning of this year, and they are actually doing what they're doing right now. I think essentially prime rentals, that's for Grade A buildings, probably bottom out in the first quarter of this year at $8.95 per square foot. The calling rentals in most of the Grade A buildings are in the region of $9.10 to $9.50 right now. I think essentially this is coming on top of those major buildings completing this year and achieving higher occupancies, the likes of, for example, One Marina, which is basically seeing 50% occupancies, to Shenton V, which is also seeing 50% occupancies, and Guak Cove Towers, which also have seen occupancies shooting up to above 70%. I think the recovery is very much in vogue.
So what are some sector bright spots in the near term?
Well, on that count, I think the office REITs will continue to see that kind of recovery that we expect from the office market. I think on other sectors, it'll be interesting to see if there are actually ball-up opportunities on the oil and gas sector, because this has, in terms of the weakened oil price for the last 3 years, has actually weakened all linkages and segregated the ship from the flock, in the sense that the weak companies are the SRES, Swipers are already going under, but the stronger ones like Keppel and Sembawang are actually holding the fort in the anticipated recovery in the oil and gas sector, probably in the next 3 years.
All right, many thanks for your insights, Gabriel. That was Gabriel Yap, Executive Chairman at GCP Global.